Hi there, traders. This is Brad Gilbert with FX Market Insight for Thursday, the 21st of March. All right, now a bit of a change here, a bit of a swing around from the Fed. Okay, now this is all the big news. And if you've looked at your charts this morning, you would have seen some significant moves in the major pairs. Okay, so US dollar in play, and this is all coming down to the Fed's statement. Okay, and part of their conference as well, following their most recent meeting yesterday. So just having a look, what they've done is they haven't actually gone into a completely dovish phase, but it is a lot more dovish than what they had before. And that has basically the same impact, but it will be probably a bit more short term. It's not like when they go dovish, they're suggesting rates are going lower. That is a more sustained move. This is more a change in forecasts. So what they've done is they've downgraded US growth, unemployment and inflation forecasts, and also roll back any outlook for an interest rate hike in 2019. So it's pretty big stuff. But really, what Jerome Powell is doing here, if you have a look at these last couple of comments from his, particularly from his press conference, and maybe sometime before the outlook for jobs and inflation calls clearly for a change in policy, and reaffirm they will be patient before moving rates again. And patient means that we need no rush for judgment, right? So just be aware, this isn't, to me, as much as the media is blowing this up as a potential cut in rates later on down the track, it's all going to depend on the data, right? But what they've done is they have actually scaled back their whole growth forecast, and that is a dovish outcome. And that has left the major pairs with that US dollar weakness sort of shining through on a few of them. Now, let me just explain that, because there's a few other things going on, and you just need to understand which ones, which currencies are really in play. Now, if I just bring you back across to the MyFX Trading Hub. Now, just coming down here to have a look at a couple of different variables here. Now, first and foremost, the trading conditions. Well, we do have some sort of clear markets just at the moment. I don't think it's going to be as clear as everyone sort of thinks, or as the media suggests, because, as I said, this is a bit of a dovish sort of statement compared to the last one, but it's not like a dovish statement, if that makes sense. So we should have short-term US dollar direction. Now, on the major technical outlook, US dollar, yep, it's definitely heading sort of a little bit lower. You've got dollar yen, which has had a knee-jerk reaction, dollar Swiss as well, euro, and the Kiwi. Now, the Aussie has had a little bit of a knee-jerk reaction, but this thing is a little bit stuck in the mud, and that's even despite slightly better retail sales figures. So on the fundamental outlook, okay, yeah, I can go with slightly bearish US dollar for the moment. The euro, well, they already signalled lower growth and gave us projections for that. And the Aussie, well, the RBA remains sort of focused on trying to get the economy going. But so this is going to be a little bit tricky, because when you come in to start trading, the two biggest pairs, or two biggest currencies, trading currencies in the world, the euro and US dollar, if they've both got a bearish sort of outlook, that neutralises definitely euro, okay, even though euro has had a short-term spike. But that's going to make things a little bit tricky for us going forward. Now, just focusing on the key opportunities coming forward. Now, the next Brexit, I'm not sure when the next Brexit vote is, but I think we're due another one this week. It could be early next week, but or even Friday. But UK retail sales and the Bank of England, the two major focal points for the, particularly for the UK session. And then you come back into looking at Friday's data, German manufacturing and Canadian CPI to end the week. So really a major focus here is definitely going to be sterling. Now, once again, if you're looking at the core market drivers, okay, Brexit and big arrow there, it's a major thorn in our side at the moment and causing a whole heap of kerfuffle with sterling. Now, just have a quick look at these majors just before I finish up. Now, just to give you a bit of a feel of what's going on. Okay, so you can see the Aussies popped higher here. On the initial sort of spike after the Fed. We had some employment numbers today, which were better than expected. The participation rate, though, was weaker, and that leaves the Aussie a little bit dangling in the breeze. Now, Kiwi, on the other hand, a break of the 68 sort of 70 level is part of a bigger, longer-term break on the daily charts as well. Despite no data out of New Zealand, this US dollar weakness could see the Kiwi continue higher. this reaction here on dollar yen to me is a bit of a knee jerk, but you know what? You go with the knee jerk until it corrects itself. So US dollar weakness is prevalent also on obviously euro. And this break above 114, this trend line here goes back to 2018. So it's actually quite significant. Although I can't see euro going massively topside when the US economy is still stronger than it, okay? I know the Fed's decreased the growth and inflation forecast, but you know what? Euro hasn't got much going for it. Sterling, now this is where, as you can see, this is a good example of a geopolitical event and what happens with it. It's just totally out of the game, right? You'd think the US, the Fed hadn't done anything, and that's because this thing is in the balance with Brexit and the deadline, what was it, 29th of March, for them to leave. They're trying to work out a deal. Have a look at dollar CAD also sort of banging all over the place. Significantly to me, oil it's above 60 bucks. It's got a supporter move on the downside, and you'd think that dollar weakness would come into play. Now that brings, actually, let me just bring you back to something else, because one thing that, you go to sleep on some of these events and you miss out what's happening. So one of the cool things here is Trump. Let me just make that a little bit thicker. Now, Trump is coming back here saying tariffs on Chinese goods may stay for a substantial period. Now, we've been expecting him to sort of backflip on some sort of deal or try and squeeze him a bit more. So just be aware that could come into play and really screw up. This short-term upward momentum, particularly on the Aussie and Kiwi, may come into play. That could be reversed very quickly. And that's where we are. So it's a little bit interesting, I'd have to say, out of orbit. It's not exactly super clear. We should have, I'd say a bearish US dollar for the next day or so until the market really works out what's going on. But Brexit and sterling are going to be the sort of key to it going forward just at the moment. All right, guys, that's it from me. Have a good trade day. We'll see you in the 247 trade zone. Cheerio.